Okay, now let's look at how to trade the non-farm payroll. The non-farm payroll is on the first Friday of each month, and it is released 8:30 a.m. Eastern US time, which is New York time. So if you look at Asia, let's say Singapore or Malaysia, it's actually 8:30 p.m. Singapore or Malaysia time. Now it basically contains information on the employment situation in the United States. Now there are two ways of trading the non-farm payroll. One is on the day of the release, and the second is end of Monday after it is released. It usually works best on the Euro US, British Pound US, and the Yen currency. Again, the Yen US currency. Now on the day of the release, we will use the 5-minute chart. End of Monday, we will use the daily chart. Let's look at the first trading strategy, which is on the day of the release. What we need to do is we need to place a buy stop and a sell stop above the high and the low of the bar by 15 pips that goes above or below the 8:30 bar. And you must enter and exit on the same day. For example, this bar that you see over here, this long bar, this is the 8:30 bar. Now when the announcement is made, you will see a long bar. What you need to do is you need to ignore this bar, 8:30 bar. You look for the next bar, which goes below the low of the 8:30 bar or above the high of the 8:30 bar. So I notice this bar has gone below the low of the 8:30 bar. So this becomes the valid bar. What you need to do is you need to place a buy stop order and a sell stop order 15 pips above the high of this bar and below the low of this bar. Now you notice the currency continues to trend downwards, so the sell stop order will get executed. Now you must make sure that you exit within the same day. I suggest to include the parabolic SAR and the MACD to time your exit. Let's take one more example. This is the 8:30 bar. As you can see, it's a long bar, 8:30 bar. So you ignore this bar. You look for the next bar, which is this bar, this bar, this bar, this bar. Now this bar has gone below the low of the 8:30 bar. So this becomes the valid bar. Now you place a buy stop order above the high of this valid bar and a sell stop order below the low of this valid bar. In this case, the currency has gone all the way up, so the buy stop order will get executed. Let's take one more example. Again, this is the 8:30 bar. You ignore this bar. You look for the next bar, so this becomes the valid bar because this has gone above the high. So you place a buy stop order above the high, 15 pips above, and a sell stop order below the low, 15 pips below. In this case, since it's gone up, the buy stop order would have got executed. Now, you can notice over here it has gone up, but it again starts to come down. So I suggest to include the parabolic SAR, sorry. So when this starts to come down, the SAR dots from below would have gone above, indicating that you're supposed to close your buy position and exit. Once you close your buy position and exit, you still have your sell stop order over here. The currency starts to come down, it would have executed your sell stop order and goes all the way down. So you would have made a lot of money on your sell order. Let's look at end of Monday after it is released. In this technique, you place a buy stop and a sell stop order above the Monday high and the low daily chart by 15 pips on Tuesday morning. Now this trend usually lasts for a week. Let's take an example. So this green circle patch that you can see over here, this is Friday. You can see a long bar. So you ignore Friday because on that day the currency is very volatile. You also ignore Monday. What I noticed is from Tuesday onwards, the currency starts to either go down or up after the non-farm payroll. So what you do is, you take the Monday high by looking at the daily chart. You take the Monday high and you place a buy stop order above the high and a sell stop order 15 pips below the low of the daily chart and 15 pips above the high of the daily chart. Place a buy stop and a sell stop. This you should do on Tuesday morning. As you can see over here, the currency goes all the way down. So it would have executed your sell stop order. In this case, gone all the way down. Now make sure you must exit your position latest by Friday, which means you have entered this position on Tuesday. By Friday, you should exit this position. Let's look at one more example. So this is Friday. So you ignore Friday, you ignore Monday. On Tuesday morning, you place a buy stop order and a sell stop order above the high of the daily chart of Monday, 15 pips above and 15 pips below the low of the daily chart of Monday. In this case, it's gone all the way up. It would have triggered your buy stop order. Now make sure you execute on you exit on Friday in the same week. So this is the end of the non-farm payroll strategy.